Are we staring down another massive macro flush? Gold slides right through the massive $5,000 psychological support last night and bottoming out around $4,680. And silver, it completely puked from $79 down to $70. This wasn't just a healthy technical pullback. It was smart money actively repositioning, liquidating gold to raise cash. Like I mapped out in my last video, I initially thought institutions would just chop it sideways to kill time before the next markup. But the macro landscape shifted fast. Oil is reaping, the dollar is surging, and yields are stubbornly high. Institutions ran the math and realized Trump might actually want higher oil prices right now. Just look at the Iran oil fields blowing up recently. You have to wonder if Trump is engineering higher oil to inflate away the doubt. With that macro backdrop, smart money decided holding gold short term is a terrible trade. And that's exactly what triggered yesterday's violent flush in precious metals. If this macro structure holds, we could easily see prior support flip into heavy resistance. You need to be extremely careful here. For the perma bulls trying to catch the falling knife, your stops will get hunted in milliseconds. This exact setup is exactly what I warned you about the second oil started breaking out. As long as crude stays elevated, gold and silver are under massive pressure and highly toxic to trade. Last night's oil pump sent inflation expectations through the roof. The Fed isn't just holding off on rate cuts, and the dot plot is signaling higher for much longer. That sent both the dollar and treasury yields absolutely flying. For zero yield assets like gold and silver, that's just a textbook macro double whammy, pure kryptonite. So what's the playbook from here? I will sum it up in one sentence. Memorize this. As long as oil refuses to dump, every single short-term rally in gold is a dead cat bounce. Fading the rips is the only way to play this. Do not listen to the blind perma bulls telling you to max out your leverage and buy the dip. The risk reward from long entries right now is absolute garbage. And plus, if liquidity dries up, precious metals could face another brutal flush. Looking at the EBC markets as whole, the overall market sentiment on precious metals is overwhelmingly bearish, and a panic selling FOMO is getting heavy. Manage your sizing strictly, especially if you are trading on margin. If you got caught offside here, no amount of margin calls will save your account. Okay, let's talk about silver for a second. The whales in silver have already front-run the exit. The world's largest silver ETF has been in a relentless net outflow mode since early March. On March 9th alone, institutions dumped over 50 tons of physical silver. That's a textbook institutional profit taking. When smart money is aggressively unwinding, retail loans need to stop dreaming about a V-shaped recovery. The macro setup is crystal clear right now. Macro, no Fed cuts, dollar is keen, yields are spiking. Liquidity, institutions are dumping, and the bid is completely gone. That silver's short-term psychological floor is around $70. If that breaks, silver officially enters a macro downtrend wave. We need a reality check here. The previous rally in precious metal was completely parabolic. It requires a brutally painful and drawn-out consolidation phase to bleed out froth and digest all that institutional profit taking. A magical V-shaped reversal is highly improbable. So right now, the name of the game is survive. I am still long-term bullish on gold. We've survived worse macro flushes before. This is just a palm in the road. So stay sharp. I'm writing this out right here with you guys. For short-term scalpers, this volatility is a gold mine, but seriously, manage your sizing. And as always, this is just my personal macro analysis, not financial advice.